Taberne Talks, here we go. Another session this week. We took a little bit of time off. We always need some time off to recharge, but we're back in action here. I got a lot to get to this week. So we don't have a guest. We will have a guest upcoming next week as we roll into the new year here. It's February 1st, guys. January was the longest month ever, right? It felt like it was 6 months in 1 month. We just went through a very crazy 31 days. As we all know what's going on in Philly last night, our condolences go out to everybody that was involved. Pretty crazy situation over the last week with 2 plane crashes in 2 separate cities. So, it's a crazy time. And at the same time, I'm trying to navigate the mortgage world, right? So that's why we're here, and real estate. And that's a crazy time too. If you've made it this far, I continue to say every week, I think you're gonna continue to make it, right? Because the strongest have survived, and we're now just turning the corner and getting into the spring market. I've just hit my 30 days at Movement Mortgage, right? So shout out to Movement for taking care of me over the last month. The processing, the closing, the support, everything's been great. They're excellent technology, great products. They've opened some doors to me over the last 30 days, but I think as we head into the spring and I get more of a flow going on, I'm feeling a lot better. So that's good for you guys out there, because that means that my service levels are even going to go higher than they are. So I'm excited about that. Well, we want to get to a lot of stuff today. There's so much misinformation out there and miscommunication being given to people online, on the internet. So I wanted to just really touch on, some things that I think are going to help out. Real quick, going on to the credit reports out there, right? Credit reports are a big thing in the mortgage business, where obviously we run your credit and we find out, are you good or you're not good? They've announced that medical collections now will no longer report on a credit report. Okay. That's good news. All right. That's good news for everyone. Okay. Credit reports were, medical collections on credit reports really hurt a lot of people. And, we feel that now that they no longer are going to be reported, we're going to open up over 22 to 30,000 more applications over the next year that can be approved because medical collections are no longer being reported on someone's credit. Credit scores are going to increase from 40 to 60 points minimum. Okay. That's a make or break on if you're getting a mortgage. Okay. I've declined a lot of people, unfortunately, good people, that either their insurance lapsed, they had to switch insurance companies, the insurance rates went up so much that they couldn't afford insurance, that we couldn't approve them for a mortgage. Okay. Now we could do it, right? So when I run your credit, you no longer have to worry about all these medical collections popping up and medical judgments. They're not allowed to be reported, which, really helps, I think, open the doors for a lot more people in homeownership, right? So if you come to me now or if you go to a lender and they decline you because you have medical collections, call me. All right. Because it's not true anymore, and they shouldn't be reported. And I think, for first time buyers, it's a win. For repeat buyers, it's a win. If anybody out there saying, oh, well, they didn't pay their bills, so they should be reported to credit, you're wrong. A lot of these people got the shaft and got, insurance companies were quick to report them, or hospitals or doctors were quick to report them to the credit bureaus for situations that were out of their control. And it knocked them out of being able to buy a home. So that's a huge thing that I wanted to bring to the front line of the show this week, because I think now that you can apply again, right? Apply, try. If you were declined before, let's give you another shot. Okay. So that's pretty big. Another big one right now is cash out refinances. So the CFPB came out with something this week that said cash out refinances can dramatically help your credit score. Okay. Doing a cash out refinance can sharply increase your chances of, juicing your credit score up 60 to 80 points, if not more. How? Okay. A lot of people out there right now are in a situation where they have a really low interest rate and they're saying to themselves, I don't want to refinance because I have a low interest rate. I get it, right? Because I'm the one that put you into those low interest rates in 2020 and 21. I was the guy that did that. But the debt is through the ceiling right now, right? And people are in bad situations, like with credit card payments and credit card debts monthly. Here's the deal. If you do a cash out refinance, the reason for a cash out refinance is to clean up all that debt. Pay all your balances down, pay your debt off, pay your auto balances down, your auto loans, clean yourself up. Because once you do that and we go to run your credit 30 days after that, you're going to see your scores jump dramatically. You're going to see things really get rosy for you. And yeah, okay, fine. So I went from 3% or 4% to 6% or 7%. I had to bite the bullet to do that, But on the flip side, my credit jumped dramatically, my scores. And I'm in a lot better of a financial picture than I was. Now, I know a lot of people are going to put comments on this show and say, well, you're wrong. Why don't they just go get a home equity line of credit? Why don't they just go get a home equity loan? I get it. I get it, because you don't want to lose your primary interest rate. Fine. If you go get a home equity line or a home equity loan, to each his own. I'm not here preaching to say you have to do a cash out refinance. What I'm telling you is you don't know the benefits truly of a cash out refinance, of the good things that will happen to your credit once you do it. Okay. So that's a big one. And, just listen, you run a scenario. It doesn't cost you anything to call a loan officer like me or anyone that I deal with or anyone at Movement and say, I want to run some numbers to see what it is to do a cash out refinance. It doesn't cost you anything. Okay. So just do it. Run the numbers, see if it works. If it works, it does. If it doesn't, it doesn't. Look at a home equity line. You have options, right? But if it does work and it makes sense, why not? Right? You got the equity in there. I've been blowing people's minds over the last month in January, showing them how much equity they have in their homes that they didn't even know. They can't believe it. 100,000, 200,000. Right now, the equity is still through the ceiling. Do it while you can, because the market will change again, and you will start to see equity go back down as prices of houses will slowly come down, which means you will lose the equity that you have. So if you have a chance to do it while the market is hot, do it. Okay. So that's my soapbox there on that. And I know I sound like a soapbox, but I just wanted to point that out, because I just don't think that there's a lot of people that understand, what's going on. So let's go into some rates. Okay. Everybody keeps asking me why the rates haven't come down. Before I get into the rate cycle, because I want to get into a rate cycle that you guys understand, and really what's been going on, and then some year-end forecasts from some of the top-notch people that I follow every week. I go on Mortgage News Daily. I follow what the rates are every day. So they give you a daily, estimate of what the rates are. Let's go into Trump, right? So Trump was in a speech last week, right? And he demanded the rates to come down. Okay. He actually went in front of thousands of people, and then he went on TV, obviously. And he said, I am demanding the interest rates to come down. I want them to come down now. Right. Now, that might not be word for word what he said, but it was to those. I watched it, and it was to that line of him demanding mortgage rates and interest rates, period, to come down. OK, listen, a lot of people voted for Trump to bring the rates down. Right. They want this economy to get better. They were upset that the last generation of what we just went through wasn't good enough to get the economy to get humming, that the interest rates went up. So let's get Trump back into office and try to get the rates to come back down. That was one of the reasons why he was elected. Not every, but one of them. Okay. Unfortunately, that's not how it works, right? You can't go in front of the world and just say, I want the rates to come down. That is not how it works, right? The Fed is the one that sets the rates, right? The Fed is the one that says, we want to lower the rates. We want to bring things down. The Fed will dictate ultimately what would happen with the interest rates. Okay. The Fed's only going to cut rates or really show some love to us in the mortgage industry is if inflation comes down. Okay. Inflation's got to come down, right? Jobs reports have to get better and better. Right. Things have to really look good for the Fed to bring the rates down. Trump can order the Fed to bring the rates down, but that really isn't doing anything. Like, he might sway them a little bit, and he might sway some of the bigger ups to say, okay, fine, the president of the United States is screaming in a podium right now to bring the rates down. But I don't think they're just going to do it overnight. Give the guy a chance, first of all, okay? He was elected in November. He just got into office 2 weeks ago. He promises that the rates will come down. Him yelling in a microphone saying that they were to come down is not the way to do it. You got to give him a chance, right? It's not going to be something that happens overnight, and the Fed has to be on board, right? He's got to win the Fed over, and inflation has to come down, okay? I saw a thing this morning on the news before I came on here that tariffs are kicking in with Trump, and it's like 25% tariffs in Mexico and Canada and all this stuff. I don't mean to get political here, but that's not going to help us on the mortgage side, okay? Tariffs are going to jack everything up inflation-wise, right? Which is going to hurt the mortgage rates. I hate to say that. I mean, I know that I'm probably going to get trashed with a lot of you people out there because there's a lot of people that don't believe that, but that I think is true. That's not a good thing. That the 10-year Treasury started to climb on Friday when it closed yesterday after he announced that. And I just don't think it's a good thing. Are the rates going to skyrocket? No. But I don't think it's good stuff when we have tariffs start to kick in. So I'm a little bit worried there, but that's just my opinion. It could be wrong. I mean, maybe they'll make them go down, but I don't think that that's going to help us. But I know this: the Fed's got to be on our side, right? The Fed's going to be the one that lowers the rates. It's not going to be anybody else. Okay, so let's get into the rate cycle. Interest rates closed yesterday at an average of 7.1. Okay. They were down a little bit earlier in the week. And now, after some reports that came out, unfortunately, we're at 7.1. Okay. No one knows that, right? Everybody thinks that these rates are a lot lower than what they are. Okay. They're not. Okay. 7.1 is the current average interest rate. 1 year ago today, in December of 2023, when the year closed, or actually rolling into January of 24, the average rate was 7.08. Okay. It's the same rate as it was 1 year ago. Do you guys remember that? I don't know if you remember that. The highest the rates have been, okay, in the last 2 years was October of 2022 when the rates were 8.03. We haven't seen anything over 8.03, but we've been averaging, in the sevens. Now, there was a short window from September of 2024 until the end of September. It was like the 3-week window where the rates were 6.1. We had a mini refi boom, right? Everybody went crazy. The smartest loan officers had their pipelines ready to go. They pulled the trigger and they were like, boom, let's refinance as many people as we can from 7.5%, 8% down to 6.1, 5.875, whatever it was. We had a little party there. I had fun too, right? I know loan officers were going crazy. Now there were unprepared loan officers who were caught off guard. And then all of a sudden they tried to get into their pipelines and their past database. And then by the time they did that, the refi boom was over. The rates went from 6.11 back up to 7.08, literally overnight. Okay. Hear me out. That's going to happen again a few times this year. Okay. They're going to have these short little windows of 2 to 3 weeks where you're going to see rates come down, pretty dramatically, right? It's going to be like, 7.11, and here we are at 6.1. Boom. You're going to see people flying to refinance again, and they don't know how long that window is going to be. It could be a very short window again, or it could be, it could last longer. No one knows that. That's the $1 million question. But if it's a really short window, you need to be prepared. Okay. What I do is I have a book of business, obviously, for the last 20 years that I have ready to go, right? I'm ready to pull the trigger on. I tell every client that I close, and if you're watching this, hopefully you are, I have you on a list right now where the minute that I see these rates go down, we're going to attack, right? We're going to let you know right away, hey, listen, rates are down at 6.1. You got to jump now, because as fast as they go down in that 2-week window that we had in September is as fast as they're going to go right back up. Do it now. I had a lot of people in September that said, let me think about it. Oh, the rates went to 6.1. Okay, well, let's wait a little longer. Because if they're going down now, that means they're going to continue to go down. And here comes the refi boom that we've been waiting for. Guess what happened 2 weeks later? The rates shot up. Guess who keeps calling me? A lot of those people who didn't do it, they're still calling me saying, did they go down again? Because they're kicking themselves because they didn't do it in that 2 week window. So now when this happens again, which it's going to, you got to do it. You can't wait because we don't know how long it's going to last. We don't know how long it's going to go down for, and we don't know how far it's going to go down. So don't try to predict it. Just do it. But your better loan officers are going to be ready to do that. Couple year-end forecast. Now, I follow Realtor.com. I follow MBS Highway. I follow the NAR, National Association of Realtors. I follow all their websites. I find out what they're doing and what they're predicting. Rates, all I do is live, breathe, and eat rates, right? I mean, that's it. I mean, for breakfast, I pour a bowl of interest rates and I see what I'm going to eat today. And that's what I do, right? So Realtor.com predicting 6.2% by the end of the year as an overall rate, okay? MBS Highway predicting 5.75 as an overall rate by the end of the year. And the NAR is predicting 6% even as an average overall rate by the end of the year. That's huge. We have three big companies that are saying that these rates are going to be a lot lower than they are right now. Are they right? I don't know. If they are right and you've been on the fence, time to move, right? Time to refi, time to not time the market anymore, time to get your stuff in order and let's go to work, right? Get your pay stubs, W-2s, bank statements, tax returns filed and ready to go here. Get them together. Get them over to your loan officer now. Have them have it on file so that when it happens, you're ready to go. I saw a post this morning that really jumped out at me. It's from a very good friend that I know, that had said that, he's tired of realtors and people calling him on a Saturday morning at 9 a.m. They've been shopping for homes for 6 months. And then they call you 9 a.m. on a Saturday morning and they want to do they're ready to do a pre-approval because they want to make an offer on a home in an hour from now. Where have you been for the last 6 months? I preach this constantly. Do the pre-approval 3-4 months before you're ready to buy a home. So you're in that window, you're fully verified, you're ready to go. Then you don't call in a panic on a Saturday morning at 9 a.m. I've never spoken to you before. You've been shopping for the last 3 months without a pre-approval, which is nuts to me, but it's still happening. And then you call in a panic and you want to make an offer on a home on the spot. What are we doing here? Get your stuff in order before, and then you come and you say, Saturday morning, Alex Taberne, you have my file on thing. Alex just needs to hit the button. Pre-approval is already done. Guys are already verified. Let's get an accepted offer on the spot. I call the listing agent, let them know how good it is. That's how it's done. That's how the best deals are done right now. I've been seeing a little turnaround though. I'm done talking bad about people because I've been seeing a good turnaround of people that have been over January. Like we had a meeting and movement, and there was a stat that came out that a number of loan officers are pulling a lot of credit. They're talking to a lot of clients. That's good. That means that people are doing the right thing. They're coming to you, they're running your credit, they're getting their stuff in order, and then they're ready to make an offer in February or March if they find a home. So that's an encouraging thing that we see, and that's doing it the right way. Like I have a lot of people calling me saying, is it okay that I call you to do the pre-approval? Of course it's okay to call me. That's what I do. And you're doing it the right way. You are not out house shopping without a pre-approval. You're calling your loan officer up front. You're doing it the right way. Okay. So I wanted to go through the rate cycle and what you need to do to watch the rate cycle as we get ready for a great spring coming up. I feel pretty good, but I wanted to go into February 1st here. It's things on the horizon as far as the top 3 programs that I see out there heading into the spring market. There's a lot to unpack. But the 3 top programs, I'm going to name them real quick, and then I can go into them a little bit for you, is your DSCR program, right? DSCR is for investors who are buying investment properties who don't want to verify income. Huge, huge program, especially in Philly. Tons of investors. The FHA Movement Boost. I'm giving Movement out another shout out here because FHA is a huge program that they have where they're financing up to 5% of the closing costs and the down payment into a second repayable lien, right? So people are coming to closing. Their 3.5% is being covered. They're getting another 1.5% towards your closing costs. They're coming to table with nothing or very minimal. Okay. And then the third one is your 3% down conventional, home ready, awesome interest rate, reduced private mortgage insurance. You're a first-time buyer. You are getting an interest rate probably 1/4 to 0.5% lower than what the market is. And you're getting in with a conventional loan with minimal down. 3 huge programs as we head into the spring. DSCR is probably the go-to product right now. And for an investor, the reason why is because they don't have to verify their income, right? We're just verifying where you're getting the money to put forward the down payment. We're verifying that you have a good credit score. Good credit score, I mean, by a 660. You got DSCR products even going to, some of them going down to 640, which is crazy. FHA movement boost down to 600 credit score even, meaning we can do the second lien for the 3.5% and the 1.5% towards your closing costs down to a 600 credit score even. That's crazy. Listen, I've been doing this a long time. This feels like some of these products are like getting back to 2008, but in a different sense, right? There's a lot more safeguards. There's a lot more sensible underwriting that's being done. This is not the wild, wild west what it was, but we're starting to come back with very good products like this that are helping the market. And then, again, we're going back to, I don't want an FHA loan, right? We're only accepting conventional loans on this offer. You got 6 offers in. 5 of them are conventional. 1 of them is FHA. Nobody wants to take the FHA offer, so everybody makes them go conventional. Talk to me. You're a first-time buyer? Let's do a 3% down conventional then. Let's get them back on a home-ready product. If I meet the income limits and I'm a first-time buyer, which a lot of them do meet the income limits, let's go with a 3% down home-ready. Awesome product, right? Interest rate is sick, and you get an accepted offer then. Remember, a good loan officer is laying out the options for you. A good loan officer is telling you what you should be doing as far as which way you should be going on your offer. If they're hearing that there's multiple offers on a property. Now, if there's no offers on a property, then they're maybe helping you with an FHA loan and maybe talking to you into doing a movement boost because it makes more sense. Okay. Too many loan officers trying to do conventional loans at a credit score of 650 and 640. You're going to get killed on your interest rate if you're trying to do a conventional loan at a 650 credit score, unless you have a lot of money down. Okay. If you're trying to do minimal down, FHA is the way to go with a minimal down product at a 650 credit score. That's just the truth. I know a lot of people don't want to hear that, but that's the truth. Okay. So anyway, let's keep going. I feel like I'm on a roll here. Like I got to breathe, man. Wow. Right? We're killing it, but I feel good today. That's how I felt coming in today because I have so much information and I just wanted to go off. Right. So somebody told me this week, a good guru that we follow on social media said, if you do nothing, you will get nothing. Right? If you do nothing, you will get nothing. Right? You know what that means? Too many people are sitting around doing nothing and wondering why they're not getting results, right? You got to do the work to get the results. I do the work day in and day out. I wake up early and I start my work, right? My work is working out, number one, right? And then let's go to work, on helping people buy a house or helping people, refinance or doing whatever we do, trying to figure out situations. I actually still get off on that stuff. Like 2:00 in the afternoon, I'm like a mad scientist trying to figure out this deal. How are we going to get it done? How can we close it? How can we get them approved? Let's try this avenue. And I'm using a lot of resources in movement. There's a lot of gurus in this company that know their stuff, right? They know how to get around things. They know who to go to. They know, underwriting guidelines a lot better than me, right? That's what they're hired for. We run scenarios by them constantly. If you have a company that you go to and they just shoot you down on the spot and say, you're declined, that's a problem. Like a good guy's going to say, listen, I'm having a problem here, but let me try to figure this thing out. All right. Give me a little bit. Let me take it back to our uppers or some of our best underwriters that we have online or in person that we talk to, or we talk to them online, whatever we do. And we figure out how to get around what we need to get around. But if you do nothing, you're going to get nothing. If you just sit and you say, hey, I talked to 2 people today. This is for going back to the mortgage industry for loan officers. And then I'm going to help some of the realtors here because I've been talking to a lot of realtors too. But the loan officers, if you do nothing, you get nothing. If you talk to 2 people in the morning and they're both declined and then the rest of the day you sit and do nothing, your results at the end of the week are going to show. You're going to get nothing. Keep attacking, keep hitting, find more clients, find more ways to get clients, talk to more people. Go back to your past people that you declined the last few months. Look them up now. The medical collection people, re-up their credit. Bet you the credit medical debts fell off. They might be approved now. Go through your past people. There's a lot of avenues that I've been learned over the years that I've now gotten into really, trying to figure out ways to help more people. Okay. As far as realtors, I talk to them all day, and I wanted to lay out the top prospecting things that they've been bringing to me that they said have been working. Listen, every realtor that I meet, I look at as a partner. I don't look at them as just in the beginning. Like my first 5 years in this business, I used to just go after realtors and say, I just want to get deals from them. Like, I just want your deals, and I don't care about you, and I don't care about anything. I cared about me, and that was it. Then I got old, and older and older and older and more mature. Okay. I started saying to myself, you know what? This is getting boring. I'm just hitting people, and then it doesn't matter. And there wasn't any fun. Right. So I started making friends with a lot of the realtors that I deal with. And to this day, if I lay out a sheet to you of 50 realtors that I deal with, 40 of them I'm friends with. Like, can talk to them. We can hang out. We can go and have a drink. We can go, out to lunch. Any party that I have, I invite them to. When I go to closing, we have fun. When I talk to them on the phone, I talk to them like I'm talking to my best friend. Like, if there's a problem with the deal, we work it out. We curse. We do whatever we got to do. Right? We just talk like normal people. I learned that that's the way to be successful in this business. Is you got to look at it as your own business. You can't look at it as just a law of just let's bang through people and bang through numbers and bang through deals. So, but top 5 ways that I see prospects, realtors coming to me saying this is what's working, because I asked them what's working right now. And this is for your knowledge. Listen, you probably know half of this stuff, or a lot of the realtors that are listening to this show know half of this stuff, but I'm going to tell you anyway. Okay. Number 1, farming, hitting a neighborhood that they know, right? A lot of realtors going back to the old school mailing. I know I call it old school, but it isn't right now. Mailing to a neighborhood that you know. Okay. People that you know in the neighborhood, deals that you close in a neighborhood and they've seen your face already. They know you. Hit the neighborhood. Let's do a joint mailing together. I have no problem doing that. Mailing seems like it's coming up as number 1, or farming in a certain area seems like it's coming back. Client appreciation parties. Have one. That's a number 2 thing that I'm seeing from realtors telling me that they're getting a lot of success. They're having a small client appreciation party. They're having a bowling party. They're having a movie party where they invite people to a movie theater, and they, all their past clients, and they treat them to a movie and popcorn. Okay. And they fill the movie theater. They rent it out for the day. That's huge. Or just having a happy hour, 50 people in a room, hors d'oeuvres, some drinks, show some appreciation. Okay. Number 3, heavy social media presence. A lot of the realtors that I talk to say, I'm on social media constantly, Alex. I do Facebook, Instagram. I'm constantly, commenting on people's comments. I'm DMing people. I'm running ads. I'm doing social media like clockwork. And I mean LinkedIn too, which is an untapped source that I think a lot of realtors need to get back into. LinkedIn is huge. Sending text video messages. I was brought to light this week that a number of realtors are having real success. Their businesses are blowing up because they're sending video text messages. Forget about just your old school text message. They're actually taking videos of themselves on their phone. They're sending it through their phone to a client. The client opens it up. They see the person's face. They like them. They get a little. That's not science. That's just, you got to have the guts to do it. You know what the realtor said to me? Nobody has the guts to put themselves on video anymore. You know how long it took me to get comfortable in front of this show? All right. Ask George, who does the show for me, right? He sees it. I'm sure he's seen me from the beginning. I was really rough to I'm a lot more comfortable in front of the camera. That takes time, right? That doesn't happen overnight. You get better and better. So they're sending video texts to people. Hi, I'm such and such. I'm sure you're looking at this house. I'm with this company. I'd love to meet. They send them video texts about their estimates that they send them on closing costs or whatever it is. And they go through the estimates with them on a video text. That's huge. That was number 4. I probably should have put that number 1. And then number 5, communicating to people in Facebook groups. Facebook groups are huge right now. Private Facebook groups, neighborhood groups, South Philly neighborhood group, Fishtown neighborhood group, Port Richmond neighborhood group. You go on Facebook, you type in the town, it comes up with the group. You become a member of that group, and then you become a social in that group, right? You comment on people's comments, you help people, you let people know what you do, you bring people valuable information about the real estate market. You become a mayor of that group. You become someone that no one knew to a group of 5,000 people in Fishtown that everybody knows now to go to for mortgages and real estate. That was number 5. So that's like some of the success stories that I'm seeing, from the top 5 people, from the top 5 prospects of what realtors are doing. And, does it work? I think it works. If you don't try it, you're never going to know. Okay. So that's big. Couple of last things I'm going to touch on are as we move into the spring, we are seeing a lot of different estimates coming from different companies, interest rates wise. Like if I'm up against a builder's lender or I'm up against another lender, it's getting scary, right? So, and it's a lot of first-time buyers that I think really get shafted here. They go through a lender, they trust them, and then they get nailed with 2, 3, 4 points being charged to them on their estimates, and they don't know any better. And then the realtor finally says, "Listen, talk to Alex. I looked at your estimate. It's crazy what they're charging you. Yes, you got a lower interest rate, but you're being charged $10,000 that you shouldn't be charged." Okay, and they're getting them over to me. Okay, and then I'm looking at the estimate and I'm saying, "Wow." Like some of this stuff is crazy. $25,000 origination fee, $15,000 in points on an 800 credit score. This is getting nuts. Like you can't do this stuff and go to bed at night and look yourself in the mirror and say, "I did a good job with these people." You just can't do it. I think the majority of them are internet loan officers that, are with companies that are out of state and they don't care what they charge because they'll never meet the client anyway. And they'll probably never have a relationship with the realtor anyway because they're out of state. It's terrible. Okay. It's really, it's disheartening because I think of my kids when they're going to go buy a house for the first time. If they didn't have me to tell them that, you're getting robbed or ripped off, that's bad. And a lot of these kids don't. And I don't fault the parents for that because a lot of the parents don't know the financial side of things either. So you're relying on your realtor. You're relying on your mortgage guy. You're relying on those people, to really give you what it should be. And a lot of the times, not that they're doing whatever they do. They just want to get the house sold and get the deal. And the mortgage guy just wants to get the deal closed. But you got to watch out. Go with the local guy, right? Go with the guy that the realtor knows. Okay. That the guy that's not going to charge you $15,000 in points unless you negotiated it. Now, listen, you can negotiate points, right? You could say, "I want to pay 3, 4 points. I had the money to do that because I want to buy the interest rate down." That's fine. Do that. But know you're doing it, right? Know that you negotiated that. Don't just get blindsided by $15,000 in points or $20,000 in points the week before closing. That's a huge problem. Okay. That, and you have no way out of it then, right? It's the week before closing and they're going to call you and say, "Listen, you got to close. Sorry." That's really bad. I wonder how many people have gotten basically screwed over the last, dawn of time, because it goes on and on. I've been seeing it for years. It just seems like it's happening more and more now. And I'm starting to get worried that, there's not enough financial education or financial literacy out there to educate people to know what actually needs to be charged and what is charged up front. Okay. So go, shop it around sometimes. I'm not saying shop every deal. There's some people that shop too much. The loyalty is going out the window. I had a guy that I gave him a really good rate. Like it was like, I even had to go to movement. And I think we took a pricing exception on the deal. Like we actually got a pricing exception to say, we'll give this guy a really low rate. He had an awesome credit score, put in 30% down, single family home. You know who you are, right? And then, you're probably watching this and you're thinking, oh God, he's talking about me. I am, right? And because here you are, you shop me then, you shop another lender, you shop another guy, you bring me back their estimate, I beat them. Then you go back to the other guy beats him, then the other guy beats him, and then you bring me back the third guy again and I beat him. And it's like it's a mess, okay? Then you finally call me and you say, you know what? I'm going to go with this other guy. He finally beat you out. He went all the way to the bottom and he beat you out. Okay. You go with them. You say, okay, fine. Have a nice day. And the guy winds up going with them. Then you call me a week later and you say, what's the rate today? Now, why are you calling me a week later asking me what the rate is when you already have shopped me 16 times, two other guys you shopped 16 times, and you wind up going with this other guy nobody knows? Why are you even calling me, asking me what the rate is? You're supposed to be going with the guy that you told them that you would go with them. And this is what you say to me. Well, I told him I'm going to go with him, but I heard the rates went down a little bit. So if you think you could still get me lower, I'll come back to you. This is terrible. It is. You got to stop. All right. You have to stop now. You know what I said to him? I'm not doing it. I'm not even bringing it to our company to try to match again, because you've already made me cut my throat, cut everybody else's throat. Then you're shopping that other guy who you've committed to. A week later, you're shopping him. He probably doesn't even know you're shopping, right? He thinks she has you in. He puts you in a process. They ordered the appraisal, and here we go. You're shopping him behind his back. This has to end. And every loan officer out there, and I'm sure a realtor too, will like what I'm saying. It's got to end. The realtors don't like it either, because then you're jumping companies. You're going back to the realtor saying, well, I'm going with this mortgage company now. Actually, I'm going with Alex now. Actually, I'm going with John Doe now. Actually, I'm going with Jim Smith now. Actually, I'm going with Rocket now. This got to end. Nobody likes it, because you're jumping left and right. The contract has to be changed. You have to do new addendums of what company they're going with. I really hate it. I hate it. Everybody else hates it. Believe me, you're not doing anybody any service. It's okay to shop up front. It's okay to do that, okay? But once you make a commitment, you got to go with that company, right? Now, a lot of companies have a float down option. Movement, one of the big things when I came over here, and they made me aware, they have a float down option, right? So you have a one-time option to float down the rate if the rates go down anywhere between now and the time of closing. There is a cost to the float down, right? It depends on what the scenario is, right? But it's a minimal cost. It's usually nothing crazy, but and the rate has to drop by a certain amount in order for them to do the float down. But it is an option, okay? Remember that. Instead of just jumping and committing to someone, and then here we go, you're cutting their throat behind their back and they're going to another company. It turns into a big mess. Get your shopping done up front. Then once you commit, you go with that guy, you close. If you still didn't like the rate, you might always be able to refinance down the road. Not a big deal. Okay. I wanted to lay that out there. And if you're the person that did it and you're watching this and you comment underneath that you're, whatever, right? I don't care. You know why I don't care? Because it's not right. That's why I don't care. Okay. So I'll leave you with that. We're going to roll into a new week coming up where we're going to have a guest coming on next week. We're going to go back to some realtors, find out what's going on the street. I don't want to bore you every week with a realtor on the street every week, because it kind of seems like it's a little much. I'd rather bring you the information that I brought you today here and there, so you know what's going on in real time. And then we go back to the street and find out what's going on there. I can tell you that I see a glimmer of light with a lot of realtors. We did a lot of Zoom calls this week with realtor teams. Anthony on my team is meeting with a lot more realtors face-to-face. A lot of Zoom calls and phone calls that he's getting and it seems like there's some optimism out there. It seems like there's a brighter light than there was even a month ago, of realtors saying, you know what? I'm starting to get busy. I'm starting to realize this is the market. I'm starting to realize that I got to work a little bit, that I got to get myself out there too. We're realizing that, I've never done more marketing in the last 60 days than I've done in the last 3 years. Like, I've been doing a lot of marketing agents directly, marketing our products, setting up an event coming up setting up one-on-one meetings, setting up happy hours and lunches and Zoom meetings, and really getting the word out of why I made the move to what I did over the last 30 days and why it's a good move. But on top of it, I'm seeing a glimmer of light in everybody's eyes. So just hang in there. I think we're going to see some busy stuff coming up as we head into March. That's what the market is. I had to remind someone last week, the market is like this, right? We're dead in a regular market. I'm going back to 2018, 2017, 2016. You're dead in November and December. Well, in November, you're still decent because people are trying to close by the end of the year. But once you get into December, you're dead. You're dead in January. You're dead in February. And then it starts to pick up after the Super Bowl, mid-February, and you crank from mid-February to August. And then you take a break in September once the kids go back to school. You get a little jump in October and November because people are moving in the fall and they want to get it done before the end of the year. And then you're dead again. That's the cycle. That's the real estate cycle that everybody forgets. It was never busy 12 months out of the year. The only time it was busy 12 months out of the year was when we were in a pandemic because the rates were 2%, right? So there was no break. I remember a lot of loan officers hating themselves at that time. Like they couldn't stand the stress of just working 24/7 around the clock, 12 months out of the year. They wanted the break. Guys, we're in that market now where you got the break. Okay. You get that break, right? The January, February lull, like you're busy, but you're not where you want to be. Then you're worried. You're like, I'm really going to have a bad year because I haven't done anything in January. I haven't closed anywhere near what I thought I was going to close. If I look at my last 3 years, I was closing. That was a different market. Every year is different, right? And then February, you go to the Super Bowl, which the Eagles are going to be in the Super Bowl. So the whole world in Philly is on fire right now, right? So you get into the Super Bowl, you get all excited, boom, right? After the Super Bowl, we win. They have the parade here. I know I'm jinxing us. And then we get to real work. Like the real spring market kicks in then, right? And then it goes straight through March, April, May, June, July. If you're not making money then as a loan officer and a realtor, and you're not gonna do it, right? Those are our prime time months. And then you get that little bloop at the end of the year. So just hang in there because it's coming. The Super Bowl's only a week away and then we go to work even more. Okay. So have a great week. It was good stuff catching up with you guys. I will see you next weekend. The show airs this Wednesday, so check it out. Hopefully there's stuff that you're writing down, taking some notes on what I'm saying because the stuff that I'm bringing you is real. And I will see you guys soon. Thank you again.